Hey everyone, Billy Rivero here today bringing you another lesson. And the lesson of the day is how to sell credit spreads. So, this is a very effective strategy, especially for those of you guys that like to play on the safe side, not to risk like to lose money. And then if you apply it at the right time, right? So, sell it at the end of the day, whatever premium you collected just to buy it back first thing when the market opens. This is a passive income strategy that you can use over and over again. You just got to be careful with the stocks you choose. And before any further ado, let's just get right into it.
You're like a circle that floats around me, keeping me safe and sound. And when I fall, you tied a rope to me. You're blessing me every day. I was down with an illusion, like a sparrow with broken wings. But now I shine with your reflection on me. I'm getting back up on my feet.
Hey guys, Billy Rivero here. Yeah, and let's just get straight into the lesson, right? As advertised, we're supposed to talk about the selling premium, um, you know, aka selling credit spreads. So in selling credit spreads, guys, it is a very smart, safe, and useful way for a passive income, right? And the reason being is, right, you know exactly how much, right, you're risking, what your max loss is, and there are a few different ways that you guys can make money on it, right? You guys can make money on it if it doesn't move, right? If it's going sideways, excuse my writing, guys. So, or if choppy, or if it's just choppy, right? So that's the beauty about selling credit spreads. The stock doesn't have to do much, and if it goes the other direction, so right, you make money, right? The only way you lose money is if if it goes the opposite direction. Let's say you sold a call credit, right? And then it breaks your outside leg. And then we get into hedging, defending positions, and which is more like of an advanced strategy that we teach here at Elite Trading Live. So if you guys want to know more about it, make sure you guys join us. And there's actually a really good course coming out very soon that's going to address like many different ways of taking trades and barely having any risk just by properly hedging. It's a strategy that I've developed over the years and just been perfecting it. So yeah, we have these three ways, right, to make money. If it doesn't move, if it goes sideways, or if it gets choppy, right, up and down, up and down, up and down, up and down. So right, the market doesn't have to move at all, and you know exactly what your like max loss is, right? So to make things better over here, what I'm gonna do is just so you guys could see better, how it goes, how it works. I am going to, instead of just using the thinkorswim platform, I'm gonna use the online platform, which I think it's better, and you guys will have a better understanding of the strategy, right? So the first thing we need to do is, for an example, yeah, this is the desktop version. So let's just get into this for now. and then we move into the web version. Right, so let's say we're looking into trading Apple. Right, so, and then there's this, there's simple rules, guys, that I use, right? For selling credit, right? So, all right, whenever, like, if you're not using just calls and puts, right? Whenever you're using spreads, right? Debit spreads, credit spreads. So when I'm buying a debit spread or anything that's directional, I want to buy time, right? Whenever I'm selling, for credit, I don't want to buy no time, right? No time, right? I want to like get the least time as possible. Zero day to expiration. That's perfect. Like, selling, like something like 30, like 20 minutes before the open to buy it back like first thing in the morning. Perfect. So that way you don't have to be right about the move, right? Because my system, it's very intense, and it will teach you, right? My move prior to the move system, it will teach you how to figure out, like, the move, the next move, where it's going to go. But with this strategy here, it's right. You don't have to be right. You don't have to be directional, right? It doesn't have to go up or down. It can go sideways as long as it's staying within the range. So what is the best way to start, right? So the best way that we start looking at this is, okay, like I said, when I'm selling premium, I'm not selling time, right? Let's look into December 30th. And the first thing we do is we look at the market maker's expected move. So how do we figure out the expected move? So we grab a call and put, we grab a straddle, a call and put in the money. But the Thinkorswim platform, it kind of gives you a range here. You guys can see here the open interest percentage, and expected move, more or less $4.26. And then if we add this up, 210 plus 240, 257, that's about like 467. So this is not too far away, right? It's 467. Let's run that up to 5, right? 5 points for this week. Okay, for this week, the expected move is 5 points. So the thing is, what is the first thing that we need to do if we just want to sell like a call or a put credit? We need to figure out support and resistance, right? We need to go into the chart here, and then weekly chart, daily chart, and then this is why this is a good strategy to take it at the end of the day, because you can, I'll teach you guys something really cool here, which is something that I only teach for private students, but it's pretty cool. So in this case here, so okay, Apple's been downtrending, right? Okay, when we look at the chart, so okay, we do have support here. The support that we have here is, this is actually MU. I'm sorry, guys. Okay, Apple, we have a new low with a buy signal, right? Okay, so which we have support. So okay, the expected move on Apple is 5 points. The thing that we could do is, all right, number one, right, using the 5-point system, we can sell a put credit. We can sell the 130. Oops. We can sell the 130 puts and buy the 125 puts. So as long as, let's say, right, this is the range, our range, as long as it doesn't breach, your 125 puts, as long as it stays within the range, you're making money. As long as, if it breaks to the upside, you'll make money. If it gets choppy, you'll make money. The only way you lose money is if it breaks the 125 and holds there or go lower, right? And then you're at risk, right? If it's choppy, if it's sideways, or if it pops up, right, you're making money. You're collecting data, right? So now let's just take a look at setting up the trade. And for that, I'm gonna use the web version of Thinkorswim, because I think it's gonna be more helpful. So that way you guys can understand how it works, right? So just give me a quick second. And it was right here for some reason. Yeah, it's right here. Okay. This is the web version, so I didn't use Thinkorswim to trade, guys. So this is right. So, and then we go into into the option chain, and then option trade, right? We can go use a strategy here, and it's like we're selling a vertical, right? But okay, not for a debit, for a credit, right? So what we're doing is we're selling the 130 puts, and we're buying the 125. Okay, so all right, and so the price here is not accurate because the market's closed. So, but the graph here is going to show us, right? So exactly what needs to happen here for us to lose money, right? And then December 26th, right? The market's closed today, so the price here that you collect in premium is not accurate, right? We know like first day in the morning. So by the way, whatever it is that you get filled for, so you're getting that in credit. So if you have $500 in your account, and then you're getting $1.50 in credit, so your account's gonna have $6.50 just by taking the trade, right? So, all right. So what is the only way you could lose money here, right? And then we go into, okay, all right, okay, Apple's trading at 131.65, right? So it closed at 131.70, 131.65. So if it goes up, look, the P&L here for December 26th and December 30th, which is the expiration date, right? So you're making money, right? If it doesn't move, let's say, okay, December 27th. If it doesn't move, just by not moving, not going anywhere, staying choppy, at the very same place where you got in, you're making $10.92. That's like first thing in the morning. Let's say it just got stuck there, right? But as it moves, you see 132, and then if it comes down, you start getting some wiggle room, right? So it's at one, let's say it gets to 130 on the 26th. You're down like $71, and you're down like $71.15 on the 27th. That's like on the 27th. But on the 30th, which is expiration date, 129.04, you're making 35 cents. If it closes at 130, because they're selling the 130, right? So as long as it closes above the 130, you're making money, right? If it closes below, you lose very little, right? But the 130 here, and look, if it comes down to 130, you guys collect like almost like full premium right there. And that's per one contract. Can you guys see right around here? Let me just draw a circle. It's gonna be right around there. So if it goes up, if it doesn't do anything, and then we move, okay, the expiration date here. Let's go into the 30th. Let's say the 30th, it's still at the same place. Look, you guys pretty much like maxed out, right? It's at the same place where you got in. But let's say it's down a little bit. Let's say it's down to, okay, let's say it's down to 129, 129.50. You're still making money. You're still making $24, right? So, and why? And then, this is like if they're giving you, 96 cents per, which is $96 per, per contracting credit, right? 125, 130. And then you guys can, you guys don't have to go 5 points wide. You guys can go 3 points wide, right? So 127, you guys are gonna get less, right? And then why do I recommend if you guys go to 120, you guys will get more, right? $1.19. So what should be more? It'll give you guys more wiggle room, right? So 115. So you guys can make this as affordable and as non-risky as you guys want. It's very versatile, right? So now going back here into the option chain, right? So why did I pick 130, 125, right? Which in other words, 5 points wide, because that's pretty much the expected move. That's what the market makers are, right? Pricing the options based on. You're pricing the option based on that move. So anything that's 5 points out, it'll hold value. Anything past that, right? So let's say, okay, 132, right? 127, you see it's 54 cents. But if you want to sell like the 119, look, we're only getting 7 cents for this, right? Which means is, okay, that's all we're getting, right? To defend the position here. So we're not getting that much credit. And I was actually looking at the ask. You got to look at the bid. So the 119 is 7 cents to 5. So you're okay. You're getting 5 cents in premium. That's awesome, right? So in other words, that's horrible. So that's why I chose the 130, 125. But and then you can tell me, Billy, but it's trading at 132. Okay, let's go to 132. Let's sell at the money, right? 132. Let's sell the 132, sorry. Okay. And buy, okay, 5 points, and buy the 127. We get even more premium, even better, right? So we'll be collecting about 155, 160 per contract, 155, 160. And this, guys, is, right, if you guys do like such a thing at the end of the day, right, just to collect the data decay on the next day. So this is such a great strategy, just like for that passive income, consistent and passive income every day. Rinse and repeat, rinse and repeat, rinse and repeat. And then you guys can start getting into 0 DTE on SPX, right? But this is the strategy here that I've developed strategy that like no BS. It is 100% accurate, and not even selling premium. It's just buying loan calls and puts. So that's gonna be part of the course, right? So yeah, okay, identify, okay, just going over selling, selling spreads here, credit spreads. It could be either a call or put credit. Identify support and or resistance. Support at 129.84. That's why I was like, you know what? Let me sell the 130 in case it drops and we get a double bottom here and then we pop. Right? But this is looking pretty good. We got a nice base here. And Apple's looking pretty good for a pop. For a pop right into 141, 140. It's looking pretty good. So, right? So that's what I got for today, family. All right. So I hope you guys enjoyed the rest of your day, the rest of your morning or night. And then don't forget to check us out. And please make sure you comment, you like, you share, you subscribe to the channel, because we have a lot of things coming. We have a lot of good things coming your way, and you guys are going to be amazed. And if you guys want to join us, please feel free. All right, we're the best. We've been the best, and we'll always be the best. All right, thank you so much, and enjoy. Have a great day.
You're like a circle that floats around me, keeping me safe and sound.